Hello, folks. Not for another episode of Sectorverse. We today have Nitya from Simpl, who's been in this business for nearly 7-8 years now, and today going to have a candid conversation with him, understanding what Simpl is, how his transition took place in Simpl, how did he start it, and the industry forward, right? Nitya, thanks for joining again. Pleasure to have you. Now, early days, you started up, you did your engineering in India, and then you moved, to the US, did your master's in Michigan, right? Could you just tell us more about, the transition from studying your undergrad and then doing your master's in the US? What do you think about that, and what do you feel back in the day?
Yeah, Shreyans, first of all, thanks for having me. Good having this chat. As you said, yeah, my background is I grew up in India, and then I moved to the US to go to grad school. And then after that, I lived and worked in New York, working on Wall Street. Started my career at Bear Stearns, trading mortgage-backed securities, which at that time was sort of the most interesting area on sort of Wall Street, which obviously eventually led to the global financial crisis. So it was, as one would say, the best of times and the worst of times. But starting a career in that area is, for a young person, like when you're learning, it's only the best of times, because I always say it's like dog years. Good times don't teach you much, but the challenging times are where you learn a lot. So it was great. I mean, especially when I look at it in retrospect, I learned a lot, had a great time, and spent, I said, 3-4 years at Bear Stearns, then a couple of years at Goldman Sachs, and then at a hedge fund. And yeah, so that's sort of like I did in the first sort of 10 years in my career. And after those 10 years where, I felt I had a very, very sharp learning curve, I grew very, very quickly, had a great time. I definitely got to a point where I was like, okay, what's my next 10 years? And how do I make sure my next 10 years are as sort of like fast growing and like fulfilling, personally, as my previous 10 years. And I did not feel that working in what I did and just like climbing the ladder there sort of will satisfy my urge. And so it was clear to me, want to be an entrepreneur, and that started the process of sort of, stumbling into one insight after another, which led to Simpl.
Very interesting. So you were at Bear Stearns when this financial crisis had hit, right? It was pretty big. I'm sure the learnings were quite a lot. What kind of learnings did you take in terms of the financial markets or the technology environments at that point of time that were there that led you to start whatever you started today?
Yeah, that's a great question. I think the biggest learning I had was how to design incentive structures, which I think very, very deeply, and we all at Simpl think very deeply as we build Simpl. Now, whenever you have a business, you have customers, you have a lot of stakeholders, customers, employees, and investors, and community at large. And one of the things that we all notice in incumbent businesses, this is not about just financial markets. It's across all markets: education, financial services, healthcare. Eventually, every incumbent was an innovator at some point, and then they become incumbent and they become very big, and they start becoming very non-transparent, and eventually become so big and so sort of almost, everybody have to use them, that they sort of like don't align themselves and their business model with their own customer, right? So the incentive structures start getting a little dicey, which is what happened in on Wall Street, financial services, which is true for Wall Street to a large extent even now, which is products and services, whether it's mortgage-backed securities or hedge funds, they oftentimes have this incentive structure where the way they make money and how they run their business and their business model sometimes are misaligned with their own customers, right? Whether it's a investor in your hedge fund and and so on, right? So, that's something and of course, incentives are, Warren Buffett has a saying, you show me the incentives and I'll show you the problems, right? So incentives are, what drives human beings and our behavior, and, depending on how we structure them, people will do the right thing or the not. And that's something I learned, working in where I did, and obviously going through the turmoil of global financial crisis, how misaligned incentives sort of, create the crisis that we all went through. And I think one of the greatest opportunities of technology, whether it is internet, mobile, machine learning, AI, and everything to come, is, how can you sort of like think about business models that exist in a completely orthogonal way? In other words, what is called counterpositioning, right? How do you counterposition yourself from what exists and use technology to sort of like align? And one of the perfect examples of counterpositioning is find a business where the business model is misaligned with its own customers, and just like come completely horizontal to it and align yourself better, and disrupt.
For sure. Very interesting. You try to first see some sort of the incentive mechanisms, and then I'm assuming that's where the learnings were, and you started Simpl in 2015 or so, right? You're probably one of the earliest in India to do something like this. But would love to hear from you what exactly Simpl is.
Yeah. So Simpl is an answer to this question. And the question is, what does the next Visa look like? The Visa, the logo that you see in your credit card, it's everywhere. Sure. But most of us don't know what Visa is. So Simpl is an answer to that question. Now, let's step back. What is the problem and what is Visa, right? So just to give you a story. So, when I was sort of like thinking about building something new, I had a few ideas. And I at that time was spending some time in India, and one thing led to another, and my bank in India rejected my credit card application for a simple reason that I did not have a credit score, which is what kind of like piqued my interest in what is a credit card. And when I kind of like sort of like doubled down and went deep into, what a credit. So, when I got rejected for a credit card, I kind of like was like, okay, maybe it'll be a cool startup to build to start a new credit card company in India that would use data science, machine learning to underwrite credit and give more people credit cards, right? And that's a perfectly legitimate business. But, as I was thinking about it, I kind of like got more curious. And so I started learning more about what a credit card is and how does it work. And, there were two things that really jumped out that made me not start a credit card company, but to sort of start the quest of building the next Visa. The first was this, very high level realization, which I think most of us who have credit cards and use it don't realize, is this thing that we call the credit card was built 60 years ago. And almost nothing about it has changed since then, right? I don't think we think like that. I never, I think, I'm not surprised, but I never realized that, right? So this whole thing was built in the 1950s and 60s, and of course, over time, and almost nothing about it has changed, except used to be a piece of paper that became a piece of plastic, then plastic got a barcode, then the barcode got chips, and then we have metal cards and platinum cards and titanium cards and all sorts of things. But at a fundamental level, it's the same thing. Okay. And because it's the same thing, what it has not been able to do is catch up with the progression of commerce, right? How commerce happens. So if you think about how commerce happened in the 50s and 60s and 70s and 80s and 90s was, typically physical commerce. You go to a store and buy something and do this thing. And now, today with e-commerce and all sorts of other things, when you think about 10-minute delivery and all these things, this is new sort of commerce that is enabled by technology, internet, mobile, etc. This thing does not work. And so what happens is the credit card does not work. So what you need to build is all sorts of other layers to make it happen. Payment gateway and buttons and, wallets and all sorts of fraud detection tools so that this credit card can work in this mobile first, fast sort of commerce space. And so, that's sort of like, wow, this is crazy that something that was built 6 years back still is sort of in the center of all commerce and it's held together with bandages, basically, right? But that alone is not the problem. Like the problem is not its old technology. The problem then is that this thing that we call the credit card is actually misaligned with its own customers, which is merchants and consumers. And this is how. So if you think about a credit card and you think about, how it works, one of the main drivers of value and business model and revenue for credit card companies is what is called revolvers, meaning they want you to not pay your bill on time so that they can then charge you high interest rate over a long period of time, right? So these interest rates vary around the world from anywhere from 18, 24% to 100%, right? Compounded annually, right? Anybody who can do basic spreadsheet math can tell you 20, 24, let alone 100% compounded annually is financial suicide. No one should, like it. It is just like crazy that it is even allowed, right? And yet the biggest industry in the world is built on that, right? And when you are a credit card company, if you're a product manager in credit card, you are basically designing the whole product to encourage that, right? Whether it is overspending or getting you to have a default option of payment, which is minimum payment as opposed to the full payment and so on, right? So the whole, it's very interesting that this 40% number, 40% of all spend, even end up revolving, is a global phenomenon. It's just not one country, it just happens. And then, so it's obviously misaligned. And on the consumer side or the merchant side, retailers pay to process credit cards anywhere from 2 to 4%, depending on where you're in the world. And if you think about where is this money going, you realize 2% out of this piece that the retailers pay go towards funding consumers' loyalty rewards, right? Which we all as consumers love. But if you were to ask a question, who does it build loyalty to? Right? It's a bank. It's an issuer of the card. And who's paying for it? It's a retailer who's paying for it, right? And the numbers are mind-boggling. Every year, retailers pay $350 billion globally to fund all these things for banks, right? I mean, this is what is called classic rent seeking, right? So when I kind of saw the problem, to me, the more sort of seminal thing to build, or if I want to, spend my next 10 years doing something, building a credit card was interesting, but I was like, how do you sort of reimagine the whole thing, right? If you were to build this thing from scratch, right, and sort of like build it in the right way where you are aligning yourself with your own customers, which is merchants and consumers, how do you build it, right? How do you use today's technology, internet, mobile, unlimited compute power on the cloud, etc., to reimagine this? And as I thought more about it, I was like, okay, well, the reason this problem is this thing called the Visa, which is a network, right? Visa's customer is not merchants and consumer, it's a bank, right? And naturally, Visa's goal is to make banks and issuers of cards more valuable, right? That's there, right? So they don't think about consumers and merchants at all, right? So that's when I said, well, probably the right opportunity is to reimagine a new Visa. And unlike Visa that we know of today, which is a network of banks, the new Visa will be a network of merchants, right? And that's what Simpl is. Simpl is a completely brand new full stack checkout network or payment network, which is what we call merchant first, and that empowers merchants to be consumer centric, right? So that merchants are the ones who own checkout, right? So if you think about checkout as we know of, right, it is kind of like either a credit card company owns checkout or someone else owns checkout or PayPal owns checkout or someone else owns checkout. How can you make merchants own checkout is the question, right? And so that's sort of like what we're building at Simpl.
Very cool. Understanding that Visa technically, dominates most of, probably Visa and Mastercard together probably dominate all the banks as well, right? So their valuations, during the COVID at least were somewhere about 480 billion, which is Visa, right? Understanding that and understanding how exactly kind of Simpl is trying to take or rather reimagining the whole systems of networks that we see. What exactly is your business model in terms of when you have merchants on one side and also when you're trying to finance this to consumers on the other side? How do you get this working?
Yeah, I think a very easy to understand analogy to understand our business model and therefore the product as well would be basically, how in India, and I think a lot of parts of the world, we have this concept of the khata,
yeah,
right? In other words, a tab that you open or an house account, right? And it is called different things. In Spain, it's called the cuenta. In India, it's called the khata. In US or other markets would be called the account. And in India, most retailers, physical retailers, will open a khata for their best customers. And the fundamental question is, why does the khata work, right? Because it's been around for centuries. It happens in big cities like Mumbai and Bangalore, or even New York sometimes. It happens in the smallest of cities. Rich people use it, poor people use it, old people use it, young people use it, right? Everybody uses it, but no one is building it, no one is productizing it. There is zero technology. It's a pen and a paper, and it's been the pen and paper for thousands of years. I jokingly call it the decentralized ledger, right? Before the term became cool, that is the original decentralized ledger. It's sitting in people's pockets. And so when I was thinking about Simpl, I asked the question, why does the khata work? Like, what is the driver of the khata? Because clearly it's been around for centuries or thousands of years. And one of the, I don't know if you have heard the Lindy effect. What it says is if something has been around for thousands of years, the chances it will be around for the next 1,000 years is very, very high, right? There is a true driver of the khata. So when I was trying to answer the question, the true driver of the khata is basically two things only. One on the merchant side, the other on the consumer side. So on the merchant side is, it enables any merchant to build a relationship of trust with their customer.
Sure.
Right? So the reason the merchant is giving khata to the customer is not because they want to be in the fintech business or they're doing lending or they want to do BNPL. It's really about building trust, which obviously translates into bigger sales and more retention. Right?
Sure.
On the consumer side, one thing we say at Simpl is the best payment experience is no experience. Right? No one ever woke up in the morning said, I want to make 5 payments today, right? Or go to a store to really make payments, and therefore the best experience is basically no experience. And the khata is exactly that, right? You go, you buy, and you don't even make a payment. And so what I said was, if we are able to take the concept of the khata and put it on the internet, so that any merchant can open a khata for their customers, right? However, if this khata is connected to each other, right, so that they're not super decentralized, so they're connected on a network, which is obviously simple, so that the network owns identity, trust, which is reputation, and risk, right? So that all these problems that could go wrong, single identity layer and so on, is owned by a network like Simpl or the new Visa. And the consumer, instead of having a khata with individual merchants and then getting 100 bills at the end of the month, get basically one bill for everything, that would be cool, right? So that not only would be cool, but also sort of like build a completely new version of a credit card in a way which is helping merchants build a relationship with their customer in a trustworthy manner, right? So that's, just to explain to you, that's basically, we have taken this concept and basically productify, basically put it on a network and made it modern, and of course use the most advanced technologies to make it scale. And so our business model is basically, we have a software which is an SDK, which any online retailer can integrate with their mobile web application. It takes a couple of hours, very easy to integrate. And the moment you integrate, you are able to give your customers 3 things. A one-click checkout, like Amazon one-click checkout, a charge facility, like an American Express charge card, so that consumers can buy multiple things, not only on one merchant, but across a network of merchants. We work with 10,000 merchants now, and aggregate all these transactions into one bill, which you then pay every 15 days. And then we work with merchants to standardize buyer protection features like real-time refunds, if delivery does not happen, etc. Those things that make people feel safe about buying things online. And this is just one full stack. So our business model, therefore, is we have the software that merchant has. Merchant then gives it to their customer. So we are B2B2C. Merchants also work with us very deeply, closely on data and stuff to approve people, right? Who are the right people to give it to, and so on. So underwriting. And then they just pay us a fees, which is charged to merchants transparently for consumers to use it. So that's a product in this business model.
Very cool. The idea of getting merchants on board is very exciting, or rather, when you started, would have been very exciting, right? How did you decide which merchant to take? How do you convince the merchants to get on board? And how would you convince the next, 100,000 merchants also to kind of partner with you in this journey?
Yeah, I think as we build Simpl, or when we started Simpl, and we continue to focus there, it's a classic two-sided market, right? So we are on both sides, consumer side and merchant side. We obviously, as I said, our positioning is merchant first and empowering merchants to be consumers. And so therefore we take that approach of the chicken and egg problem for us is the chicken, which is for us the merchant, right? And merchants have the customer, right? So we focus there. Now, one of the things we say, I often say at Simpl is the first 100 merchants are impossible. The next 1,000 are very, very hard, but the next 10,000 are easy, right? So, it's a classic network thing, right? You hit a tipping point at some point, it's after 1,000 or 5,000 merchants. We're now at 10,000 and truth be told, it's never easy. It's always hard. There are customers. We always try to make the product better and so on. But there is something to be said there. So the first 100 merchants were really hard. Not only hard because merchants, no one wants to be the first mover here, right? So we had our own share of oh fuck moments, right? Shit, this will not work out because we had a product and worked pretty well, and we thought about every detail except the first merchant does not have a reason to use it, right? But as we were working on it and we were persistent about it, one thing we learned was where this really adds value to is where use case is frequent, right? Just like khata, right? You don't want to open a khata where you go once in a year or once in 6 months or once in a quarter or whatever like that, right? You want to have a khata where you go every day or every second day, right? So, which is where we focused a lot on retail, online retail where frequency is high, right? So naturally that became a lot of things like food delivery, grocery, movie tickets, hyper local commerce, and then of course because of mobile and everything that's going on, from you can get delivery in 30 minutes to 5 minutes, it's definitely a trend that we benefited us, although we believed in this trend and we continue to believe so, how mobile really sort of blurs what is online commerce and offline commerce. But yeah, we focus a lot on frequent transactions that people do, and then we sort of like use that as a sort of like our Trojan horse, and kind of like went to other things that may not be as frequent as hyperlocal commerce or food delivery, but frequent, but slightly less, like clothes and shoes and lifestyle and so on, right? So we focus a lot on things that people do in a month, right? That's how we think about it, just like a credit card, right? We are not interested in financing your motorcycle or your phone or a computer or your washing machine. That's not our goal, right? We are focusing on checkout solutions where easiness, intuitiveness, and frictionlessness and trust are what is preventing commerce for both merchants and consumers. And our goal is to use all these few things that we have: one-click checkout, trust, ease, and so on, so that more transactions happen. And so the 2-3 things that we really solve for retailers are: we increase conversions and we reduce cash on delivery.
Interesting. So I'm assuming the experience that Simpl and Simpl-like apps would probably overpower any sort of card payments, right? In one area that we see that merchants kind of get a lot of transactions done or get a lot of sales done for themselves, they usually don't like paying that commission, right? When you see even to the cards, they probably complain that why should I kind of pay when I go out? They say just give me cash or UPI it to me, right? And then I'm sure even Simpl kind of charges that. So how does Simpl kind of convince the merchants in a sense that, boss, we are giving you more sales, but we're also probably taking that commission out of it?
Yeah, it is actually data, right? Data shows that Simpl is a conversion company and not a payment company. So right. So and you're making a very interesting point here, Shans. The reason merchants, Amazon recently said no to Visa cards in UK and so on, right? And this has been happening, especially in online commerce over the last 20 years. And the problem is online retailers do not find the benefit of what the payment companies offer them, right? It just seems like you are basically, I'm getting the customer, I'm doing everything to make the sale happen, and you're just taking 2-3% out of my sale, right? And why? Like, why? Right? You're not really adding value anything more than just like moving money, right? So there is no reason, right? And therefore and that's what the adverse thing is, right? Now, just to give you a sense, every retailer in the world spend 30% of their revenue, 30 to 40% of the revenue on advertising. Right? One of the sayings in marketing and advertising is 50% of my money is wasted. I don't know which one. Right? Sure. So it's basically very, very inefficient right now and really broken. And when you come to online commerce now, the biggest problem is I'm spending 30, 40, 50, sometimes 60% of my revenue on basically getting people on my website, right? But conversions are very, very low. In India, conversions on D2C e-commerce and a lot of e-commerce is under 1%. In most developed markets, it's 4 to 7%, and even higher, 15% sometimes, right? What gives? Why, right? And there are two big problems: friction, any sort of friction, right? Friction of, and that's how we think about it. You define friction slightly more holistically, right? Friction of trust, friction of clicks, friction of filling of forms, friction of anything that makes me feel I will do it later, right? Our vision is, and the way we think about ourselves is, we are the friction. Our goal is to make friction zero, right? So that this 1% becomes 5%, 10%, 20%. It could be higher too, right? And therefore we provide leverage to your marketing dollars, right? And merchants really want to spend money on marketing.
Very cool. In a sense, you're stating that the friction, or rather the folks don't buy the stuff surely because they have to put some sort of an OTP or some sort of CVV number, etc., which kind of takes them aback, right? And which is why Simpl kind of provides this. But while we solve one sort of problems for the merchants and for the retailers, there's another side of it, right? There's another side where Simpl provides these funds to the consumers. How exactly do you kind of provide these funds? Is it a bank, NBFC? Is it how does Simpl actually do this?
Yeah, the way we work is so the way when consumers use Simpl, they're buying on an invoice.
Sure.
Like a khata, it's a classic khata.
Yes.
Right? And so what we do is, in the background is we basically finance these invoices like a factor. Right? We securitize these invoices as an asset, and merchant gets paid either upfront in the next day or when the consumer pays back.
Sure.
Right? And our job in the middle is to work with the ecosystem merchants and all merchants together so that we can weed out consumers who are opportunistic, meaning they will use it and not pay, which happens in khata, right? It happens. Right. But because we sit on top of e-commerce as a layer, we have the entire view of Shreyans being a good customer, right? If you're a good customer on one merchant, you're a good customer. You probably are a good customer in terms of you're paying in bills and so on and everywhere, right? And so we think of it as a networked way of thinking about trust.
Very cool. So in a sense, how do you justify, or how do you say that, okay, fine, for this particular merchant, I'll probably pay on day one versus another merchant, I'll probably pay once I get the money back from the consumer? How do you do that?
So we don't decide it, we give it to the merchant. And that is a classic, example of account positioning here, which is in payments, the entire payment strategy, which is look in the end, right? There is a symptom of any industry where you are now misaligned. Which is the lack of transparency, right? So payment companies are, notoriously non-transparent. Why do you charge me 3%? Can you show me, right? Show me your cost structure, right? And no one will show you, right? And one of the reasons no one can show you is because there are 100 people in the middle worth $1 trillion of market cap who have no incentive to shed light on the amount of wasted money that is, just making a lot of money for someone else, but not adding value to the commerce players or consumers. And so therefore, because we are aligned, we don't just say that, we actually price it like that. Merchants have the option to get their funds in real time or when the customer pays. And depending on what they do, the pricing is different because there is a cost to everything, right? There's a cost to money, there's a cost to risk. and so on. We also do risk-based pricing. When the risk is low and merchants work with us very closely with data, however, where risk is becoming lower, we actually reduce prices. We are actually one of the few payment companies who will go to the merchant and say, hey, look, your customers are really behaving very well and they pay on time, everything else. We charge you too much. We would like to reduce the price. And merchants are like, what? We've not heard that before from a payment company.
Sure, that's nice. In a sense that coming back to my previous question, Simpl gets, or rather puts the capital in front, right, for the consumers as such. So my understanding is that Simpl also kind of does the underwriting for the users and takes the risk for, saying that, okay, I'll probably give to this user X and not give to the user Y or sorts, right? Is that how it works?
Yeah, we do. Yeah.
Awesome. In that sense, what usually, I'm assuming over a course of time, initially when you started, the cost of funds or the cost of capitals would have been a lot higher for you, right? Because the model has not been tested out. But over time, how has the ecosystem kind of appreciated the fact that, there's a lot of lesser NPAs in this or of sorts? How has the transition happened over time?
Yeah, no, that's a good question. So first of all, when you think about risk in this business, right, not all risk is the same, right? So when you, because this is a checkout product, and in the end, you are bundling small transactions for a small amount of money and then settling every 15 days, this risk is more akin to what is called a settlement risk, the probability of settlement, as opposed to, oh, somebody's run out of money because somebody took out a loan of 2 lakh rupees or 20 lakh rupees, right? So that's an important qualifier here. And obviously, there are a lot of companies who take settlement risk, right? PayPal is a classic example of that globally, and especially in the US. What happens with PayPal is, they connect to your bank account through what is called ACH, and then you can do checkouts on PayPal on so many websites. And this ACH settlement happens in 3 days, right? So it takes about 2 to 3 days for the settlement to happen, and you're taking that risk because the consumer may not have money in the bank account, or very importantly, and which is the hardest problem to solve, is fraud. People can, cancel their bank accounts and so on, right? Or pretend to have a bank account but they don't have.
Sure.
So the biggest problem is that risk and fraud and so on, and there is no easy solution to it. You have to basically, one of the biggest IPs we have built is this entire infrastructure around identity, risk, and fraud modeling, which is, when we started, it was more about heuristics, just basic heuristics, and things that then led to statistical modeling, and then machine learning, and then machine learning just becoming more and more advanced, multiple models and so on, right? And obviously with that machine learning and as you get better, your fraud and risk levels keep on going down because you just get better with time, right? And that's obviously when you get better, your cost of capital becomes lower, both equity and debt, and that's a regular general progression a company like ours take.
Interesting. In a sense that when I make payments, I realize that there are too many ways today I can pay from, right? I feel like I can pay via cash, and I can pay via cards, I can pay via BNPLs, I can pay via Simpl, so on and so forth. How do you see this, the market and broader structure of Indian market, because there are a lot of payment companies, and how do you see Simpl, in a sense, making it simpler to pay?
Yeah, as I said, right, the problem is payment itself, right? The best payment experience is no experience, right? Sure. So we are pushing the market to that side, right? If you kind of like think about one of the thinkings when I used to talk to retailers online was, there was a thought process, which was consumers want options, right? So you need to have 20 options on the checkout page, right?
Yes.
The reality is no one wants to pay even, right? As I said, no, right? So yeah, the way we see this is, a frictionless checkout. Like you will not be deciding, all these decisions, right? This will be intelligently handled in the back end, which is what we do, and we are building multiple things. Hey, you want to use this type of things, for this type of use case, here it is, right? And so on, right? So that there is never a payment page, right? That is the worst page. That is the page of death, I call it, right? That's where the conversions go to die, right? Payments fail, People forget their passwords don't come, the whole nine yards, right? That is a payment page that is, I call the original sin of e-commerce.
Very cool. Apart from these payments, applications and big software companies that we're seeing, we're also seeing a lot of push from the government, right? We saw that with the debit side of it with UPI. While the government is still speaking about the credit part of it, right? Do you see that as a challenge in a sense that UPI has taken off and nothing like it we have seen in any other country as well? But they've solved a very important problem for the debit side of it. While credit is still underway, do you see that as a challenge for a company like yours?
Look, I mean, the way I think about it is 70% of e-commerce is cash. It's been cash since 2015, in spite of demonetization, in spite of everything else, right? And of course, UPI is a phenomenal innovation and growing very quickly, and we all know, right? And it solves a very important problem, which is why it's growing as fast as it is. But when you think about commerce, especially e-commerce, and then all sorts of versions of e-commerce, right? E-commerce is anything from buying a t-shirt that will come to your house in 7 days that you will know after wearing whether you like it or not, and then you might want to do a return, to 5-minute quick commerce on Dunzo or Blinkit or Zepto. That's the range of e-commerce, and in that range of e-commerce, consumers are looking for user experiences that makes it easy, simple, and trustworthy for them to sort of like not have these things, which means real-time refunds and not worry about delivery not happening and so on, right? So the way we think about it is, UPI is a great innovation in India, phenomenal innovation, which is an open, and it's just not UPI, it's what is called the India stack, right? Identity payments, real-time payments for free and settlement, and the account aggregator layer, which basically is an open infrastructure, open APIs for anyone like us or anyone else to develop user experiences. So that, consumers, why do people use cash? Like, well, cash is actually a very good user experience. It's a one-click checkout. I don't have to worry about the delivery does not come, right? I have all the leverage as a consumer. So consumers don't use cash because of any other reasons. Like, that's a false narrative. Cash is the best user experience. Because it solves for one-click checkout and trust, right? So how do you solve that is the question. And I think that's the opportunity of UPI and India Stack. How do you use these APIs to create user experiences that solves consumers and merchant problems?
Interesting. While we make the payments, one thing that I'm always curious about and understand is risk, right? I'm sure even you've been in risk for over 10 years and you've seen that. It's always said that financial institutions do underwriting the best of sorts, right? That's what they've been doing. That's their business. How does a startup or a tech savvy platform kind of say that, boss, even I can do sort of underwriting and do it better than, or as good as the financial institutions that have been there, or probably even better, right? How do you kind of say something to that?
Yeah, I mean, again, that's sort of the progress that technology makes, right? I'm sure in late 90s, probably I was not that much around and like knowing anything about my late 90s, but I'm sure it was said that Walmart will do internet commerce the best, right? Because to be a retailer, there was a concept of what a retailer was, right? And fast forward 20 years today, 25 years, we kind of like can bet now that whatever we thought what a retailer is and how you build a retail company, how you make money, how you service your customers, and how you build supply chain, everything else, is completely with Amazon and so many things, right? Similarly, and when you think about what gives here, right? I mean, so obviously what Amazon did was leverage technology, which is software, internet, mobile, and everything else that comes with it, to create this massive network effects of, demand side network effects, supply side economy of scales, data network effects, using data, and then of course, advanced machine learning to solve all these problems that are basically data problems. So if you think about, and then of course, in e-commerce and retail, there are these hardcore physical, problems around warehouses and so on. But when you think about risk, right? Risk is a classic data problem. financial services are nothing but data, right? There is nothing else in financial services except data. And so the ability for fintech or anything that is using technology, right, to sort of like really reimagine how anything is done, whether it's underwriting or fraud protection. I mean, it's obviously there, right? And so I think that's an important thing, and I think that's where I think the approach that I think that really works is not to sort of like box yourself. If Amazon was building Amazon, we're thinking like, okay, let me first build a Walmart and then build an Amazon website on top of it. I mean, that'd be completely backwards, right? Putting the horse before the cart, so to speak. So yeah, I mean, like if you kind of like approach it from the first principles around, what has changed and how can you leverage that to, do everything better, right? And sometimes it's technology. We have already proved that, this can be given to a lot more people than even a traditional way of looking at it could do.
Very interesting. To be honest,
By the way, I'll give an example. How many people do you think have credit cards in India?
with 30 million, right? Yeah.
30 million people. How many people in India you think have used a khata before?
Oh, plenty. Must be multiples of 10x or even 20 maybe.
Yeah, I mean, I think it's fair to say probably 500 million people, right?
Yeah.
Right. Clearly it works, right? How do you make it work with technology is a question.
For sure. This is one part of the risk, while there's another part of the risk, and which is very true for fintechs and fintech like apps in general, right? They say it's easy to give money, but it's hard to collect the money, right? Where do you see that in terms of the NPAs created or the bad apples that are there? How do you kind of minimize that? I'm sure there would be some in the ecosystem. What do you do to minimize that? And rather, if you can just probably throw numbers for Simpl, what are these bad apples? What is the percentage of bad apples rather?
Yeah, Shreyans, I think first of all, just to answer your question, like the number that we track is what we call net transaction losses, which for us is 85 basis points, 0.85%, which is basically nothing but if 100 rupees crosses our system, how much does not come? So it's about 85 basis points. It used to be higher with better stuff and our scale and all sorts of things we are doing. It is just going lower and lower, and we think it'll go lower than where we are today. Obviously, it'll never become zero, but it'll go lower, right? So that's number one. But that's obviously we are doing a lot of things. But I think the more important thing is the way we think about solving this problem is we're not trying to solve the problem of bad apples and like finding them and like underwriting them and then collecting from them. That's in my approach, in my opinion, a wrong approach, at least for what we do, right? I think it is. We are thinking about building a new system and therefore a new system of incentives so that the whole system is better, right? And before giving some details, I'll give an example that you might relate to based on, a product that we all use in the world that is very big, which is Airbnb, right? So when Airbnb was started, and in the early days, obviously it seems like an interesting idea for people. It's definitely a romantic concept to live like a local and belong anywhere, right? But obviously there is a underbelly to it, which is like all sorts of risks in inviting people in each other's houses, right? It could be definitely theft and murders and so many things that could happen in that spectrum. Far more serious things that could happen than like somebody taking 3,000 rupees from someone, right? And murders and anything can happen. And I'm sure those things happen. But we all know Airbnb operates at massive scale in every market in the world, like crazy amount of countries. No hotel chain has been there before. And those things, those bad things that happen are, I'm sure it happens and it happens hotels everywhere, are a relatively small percentage, tolerable percentage, right? And those probably things are getting lower and lower. So the reason it's happening is Airbnb thought about this as not a problem to solve through some conventional means. They thought about it as a systematic problem, and they used data science, product, and design to solve a very complex problem around trust. Right? That's how we think about it, right? Simpl is not solving this problem of underwriting and collections, right? I mean, like we don't even think like that, right? Of course, there are parts of those are some parts of the system, but really the question we ask is how do you build a system where trust is default?
Sure.
Right, and naturally when that happens, and then that's just accrues, right? One of the things with trust is trust compounds.
Agree. Oh yeah, for sure, right? In we all reimagine a society where bad apples are near zero, and of course everyone kind of pays for the value that they get. Having said that, where do you see Simpl? You started off saying that you envision reimagining Visa or Mastercard, but where do you see Simpl in the next few years? Do you see Simpl as a product that almost all merchants would have it on their checkout space? Or do you see Simpl also kind of integrating with a lot of banks and banks offering to consumers? Where do you see this?
Yeah, so the way we definitely see Simpl is that all merchants in the world who are interacting with their customers and making it transactions in any online sort of space. It could be a quick commerce in 5 minutes delivery, it could be order ahead, or it could be general purpose e-commerce, or such forms of commerce that will arise that we don't even know of today. We'll use Simpl as an embedded layer so that they are able to build a checkout experience that we discussed about that every customer wants. So we definitely expect that, not only in India, but globally. So that's number one. This is definitely a global opportunity. Just like Visa, it's not like in one city or one country. We are one of the very important parts of our business and positioning is neutrality. We're neutral, right? We are not part of a bank or a merchant, right? So we think about Amazon Pay can never do what we are doing, or PhonePe or Paytm or anything like that, right? Even banks, right? So we are a neutral platform which is open, right? So that merchant but our mission is clear. We are benefiting only two people, merchants and their customers, right? So in doing so, because there is a flow of funds, of course, banks become a very important thing, right? So we are working with banks actually as we speak to plug into our system so that this flow of money can be more seamless, and banks can be the one extending this line to the consumer, just like they extend a line on the credit card. But the mission is clear. We are here to benefit merchants and consumers. And of course, we are not here to not benefit banks or anybody. Everybody is our customer, but we want to be kind of like, the way we think about it is it's like really fair, transparent to all people who are part of our ecosystem.
Very cool. Now India, which is the next market that you see Simpl can kind of hit the bullseye?
We have some thoughts, but we're not talking about it openly right now. We're looking at a few markets. A lot of exciting things are happening everywhere. Technology is disrupting every version of retail that exists. So, and we are the only sort of company who's doing something of this sort, right? There are people who are doing buy now, pay later, but typically it's for something to around financing and some sort of a for payments and so on, right? We are the sort of the only company that is more about buy, pay once, right? That's what we are, right? We are buy, aggregate everything and pay once, right? Like I like to say, one bill for everything. So let's see, but we are doing a lot of stuff.
Awesome. All right, Nitya, I think, we've got a lot from this podcast and quite a lot of, information that a lot of our users as well as me would have a lot of learning over the course of the next few, months, if not years. Thanks for joining in. It was a pleasure speaking to you.
Thanks, Shreyas. Thanks for having me. This is great.
Pleasure.